Since April, I've made 9.11% on this Forex account. As you can see, this is little under $300, and that's because I don't have tens and tens of thousands of pounds and dollars to play with. Probably similar to a lot of you guys watching this video. But what I've learned is that if you've got small capital to trade with and you decide to go and try and 2x, 3x, 10x accounts, it leads to a very unpredictable, reckless style of trading, and it's very often not profitable. A good way to measure how much profit you're making and whether it's worth it is just compared to the S&P 500. That's a fairly passive way of investing where you just invest into the American stock market. It averages around 8 to 10% per year and takes you little to no time or effort at all. So if you're on level or less than that, you're probably better off choosing the passive option. If you're beating that, which it looks like this strategy that I'm performing will, then you're better off trading yourself. Now, the difference here between trying to 2x, 3x, 4x, 5x an account is that I think this is extremely possible, and I think it's extremely possible for beginners as well. It's actually quite a simple structure system once you understand it. I've made it very simple. So yeah, I've got my intuition and experience now, which helps me a lot. And that's probably where some of the money is made. But what I'm actually doing is very simple. And I'm going to test my strategy now as I've just come back from a short holiday, and I'm going to test it and show you exactly what I've been doing to get to this 9.11%. The main reason I believe I'm profitable is down to my risk structure. So I have around a 50 to 55% win rate, which is great using a 1.25 risk reward. So that in itself is profitable. But what helps my profitability even more is the risk structure. So for example, if I'm on losing streaks, I understand what my max losing streak is, my average losing streak, things like this. So when these numbers and performances start to happen, I tend to risk a little bit more each trade. Now, I don't double, I don't triple risk per trade. I'm not nuts. I can afford a 10 trade losing streak before the account is blown. And that is essentially my strategy. Some of you are going to argue this is gambling. Indeed, it is. Trading in itself is gambling, but I'm just showing you what I've been doing and how it's been working for me for some time now. Now, for the sake of this video, I'm not going to show you the exact risk structure I use because that is for the members in Sam's Effect Society. They pay to be there. They pay to see it, see my journal, to speak with me, one-on-one calls with me, whatever. So I'm just going to pop some numbers on the screen right now, and these are the trade numbers we're going to use for this experiment in this video. This is a much higher risk structure, and I spoke about the video saying this is not the way to trade, and indeed it's not. Long term it's not, but for the sake of the video, to make it a bit more interesting, we're just going to trade like this so you get the idea, and we're going to see how many gains we can make. We're going to do maybe 5 to 10 trades, something like that, and just see where we can get to the account to. So firstly, I'm actually going to show you what my strategy is and very simply outline it. Okay, the strategy itself and reason for entering, you can come up with these yourself, or you can use mine, whatever. But a lot of the time, what really matters is that you keep it consistent, so you don't mess up and mix up what you're doing. You keep it the same all the time. You accept you're going to have losses, you accept you're going to have winners, and you do the same thing over and over again, and you have a repeatable strategy. Okay, the simpler it can be, the less rules that you can, use that make it work, the better. Now, essentially, what I look for is a zone where prices had at least 2 really clear reactions in the past. Okay, so something that looks a bit like this. So 2 times prices got to this area and it's spiked off. What I don't look for is if prices got there and it's sort of gone sideways a bit and started to chop through. That is something that I don't look for. So that's step 1. So we found a clear zone. Step 2 would be to set alert at this zone. If price comes up here, that's great. I don't just enter. Prices got to the zone. Now what I want to see is a bit of rejection. Rejection can mean whatever you want it to mean. For me, it essentially just means price going sideways, price starting to move down, something like that. And then here I would enter a sell. That's it. And I go stop above the zone, above recent highs and stuff, and I go for a 1.25 risk reward. That's essentially it. And of course, the opposite is correct. When entering buys, you just using support zones instead of resistance. There's one other trade that I like to enter. This is the break and retest. So this is if price is trending upwards, and essentially I would like to get in. And it would look something like that. Price would break the zone. Again, it would come back to the zone, reject it, 1.25 risk reward, things like that. Okay, so that's when it's in a strong trending market. You look for things like that. When it's not trending, look for more bounces of zones. So I hope that sort of makes sense. That's quite a rushed, simple answer to what my strategy is. So we're on Euro GBP. We're just going to use the replay feature, go to a random bar on the 1 hour time frame. So here we have gone to July 2022. We're just going to test some trades here, and we're going to use the risk structure, which I've got on the screen for you. Right, so here's our first trade. It looks a bit messy, but we're basically going break and retest, hoping that this downtrend will continue. For the sake of this experiment, we are using a 1.3 risk to reward, and our first trade is going to be 10%. Now, we're going to use a £1,000 account, just to keep the numbers nice and simple. So we're going to open up this £1,000 account here, and let's see what happens. Okay, so this one was a loser. So we risked 10% on this trade, meaning that we lost £100. So So the account's at 900 now, and we're just going to look for our next trading opportunity where the risk will be slightly higher. So here, this looks like another good place to short, although I'm going to look for one more candle, see if we reject a bit more, and here we go. So now this next trade, we will use a 15% risk. Let's see if it wins. Okay, this was another loser. So here we will minus the 150. We are now down to 750 account balance. So we've got 2 more trades to essentially win, otherwise the account is blown. All right, so this looks like our next opportunity. We're going to go short here. Now stop just above the zone and some recent highs using a 1.3 risk to reward. And here the risk for this trade is 26%. So let's see how we do. Okay, great. So this one was a winner. So 26% is 260. We're going to times that by 1.3, and that was our winner. So 338. So on here, this trade, we're just going to plus 338. So yeah, after those 3 trades, we lost the first 2, won the third one, and the account is up 8% right now. Now, this is quite an aggressive risk structure. You know, I tame this right down, risking to like sometimes less than 1% per trade, but this is just to give you an idea of what's happening. So this is the account right now, 8% gain. All right, so this next trade we're looking at, we're going to go short, sort of a break and retest. It's not broke very strongly, however, it's in a bit of a downtrend. So we're just going to go 1.3 risk to reward. Again, the first trade, after a winner, you reset back to trade number 1. So this will be 10% risk, and let's see how this goes. Okay, so this one was a loser, so we will minus 100. Now, what you can always do if you want to compound more is you could, in fact, every winner and the new account balance, you could then reset the risk per trade. So it could be 10% of the new account balance if you wanted it to be, if you wanted to compound quicker and be quite aggressive. On my personal account, what I do is every time I make $100, then that's when I, reset the account balance and increase the risk per trade. All right, prices come up to the zone. We would have entered after that red candle, but we'll enter sort of during this green candle. Now, same thing, 1.3 risk to reward, just looking for a mini bounce off this zone. This is trade number 2, so it'll be 15% risk. All right, and this one was also a loser. So we were minus 150, the account is down to 838. All right, we're going to go long here. Price has come in, it's had quite a deep test into the zone, and it's rejected quite strongly. So we're going to go 1.3 risk to reward. This time, the risk for the trade is 26%. All right, and this one was a winner. So again, 26% is £260, times by 1.3 to find out our winner, and it's the same as last time, 338. So we just plus 338, and now the account is sitting at 11% gain. All right, we found our next trading opportunity. Price has rejected the zone again. So we're it's had quite a deep, aggressive action towards the zone and rejected. So this is sometimes good. It looks like a lot of people are going to be placing their buy orders and getting out of sales. So again, 1.3 risk to reward with a 10% risk per trade. Let's see how we do. Okay, cool. This one was a winner. So obviously 10% is 100 times 1.3 is 130. So this time we will plus 130. So now the account is sitting at a 30% gain. Okay, we'll be looking to take just a few more trades and see how we go from there. Right, we found our next trading opportunity. Price has come down to this zone. Looking that there's going to be a mini bounce, hopefully, before it breaks the zone. If it does do that, 1.3 risk to reward. Again, 10% risk per trade. Let's see how it goes. All right, this one was a loser. So we minus 10%, which is 100. So we're just going to minus 100. All right, now we're looking for trade number 2 in our streak, which will be a 15% risk. Price can reject here. We might look for shorts. All right, here's our next trading opportunity. Price has come up to the zone. It's come up a few times, sort of uptrended a bit. So it's not a super strong, clear trade, but we're going to take it anyway. Trade number 2, 15% risk, 1.3 risk to reward. Let's see how we go. Okay, that was a quick loser. So minus 150. All right, here's our next trading opportunity. So it's trade number 3 in the system, in the streak. So stop just below the zone, 1.3 risk to reward. Let's see if we get the bounce. Nope. Okay, that was a quick loser. So minus 26%, which is minus 260. So we're down to trade number 4, which is the last trade, unless we blow the account or we call it a loss, and that'll be 47%. All right, so we found our next trading opportunity. This is the last one, sort of make or break type thing. And we're just going to go stop just below the zone and the recent lows and a 1.3 risk to reward. See if we can pull it off. It's a 47% risk for this trade. So you're going in very, very high risk. And we'll see if it will come on. Okay, it played out just. Very nearly lost, but in the end, it wicked and we got the win. So that's great. So 47% risk is 470 times 1.3 is 611. So now we will plus 611 to this account. And, we'll wrap up this experiment here. So that's a 40% gain, 40. Now, this specific experiment was very risky, very high risk. I anticipate that this account will get blown because you're basically risking, everything in 4 trades. And if you know your results and your metrics, you'll see it's probably quite likely you've had a 4-trade losing streak before. So the way I personally do this is nowhere near this high risk. It's much lower, where I can afford up to potentially 10 trades losing streak. But this is just to give you an idea of what is possible. And, it's quite a high risk way of trading how I trade. But it's basically showing that even with a poor strategy, like how quickly I was taking to enter trades there, I wasn't really focusing on the strategy much. I was just more focusing on the risk structure. It just had to get to a good zone and reject, essentially what I was looking for. We didn't even get a 50% win rate. It was lower than that, but we still made a 40% gain on the account, which is quite outstanding. Now, again, we've said that it's probably likely to blow, but I'm, again, just emphasizing how important risk structure can be if you get it right. It needs to be low risk overall, which in this video, it certainly was not. And I would not advise trading like this. This was more for the sake of the video to make it a bit more entertaining to see what's possible. But I hope you found this video useful. You get to see a bit of an insight into like risk structure and how, not every trade is weighted the exact same, because I know that my average losing streak is like 3. My max losing streak, I think, is now 5. And therefore, if I'm taking a 6th trade, then that is more likely to win, or it's more probable to win than the first one, even though no 2 trades are ever related. Okay, in terms of probability, it's probable that I will win my 6th trade if I've lost 5. So I'm basically just playing the probability game. There's still risk to it, still blow the account, but I'm just showing what I've been doing. That it's been working for some time now. I've been trading profitably for over a year, and this specific account 9% in the last 4 months. Hope you found this video useful. Cheers.